Talk about the demand side and how it relates to China, specifically whether it's copper or whether it's iron ore. How sensitive is that to the construction level within China?
I think very, and on both counts, both iron ore and copper. Now, there is also some sort of really geeky stuff you can look at in terms of the purity of the ore they're buying. That is enormously important, although it sounds incredibly dull, but it tells you everything you need to know about trade patterns between South America and Australia, where you tend to get the higher grade ores, and Chinese domestic production, where particularly in iron ore, you get the lower grade ores. So the higher the steel prices move, the more sought after are the higher ore grades from South America and from Australia. But in terms of the construction sector itself, again, we've seen some attempts to come and prop up that sector. That then plays on into the base metals demand and the ferrous demand. And then looking forward into 2018, I don't think there's a great sense that that's going to change anytime soon. They're still going to have to make those adjustments to try and keep growth rates rather stable, again, stop it falling off a cliff.
Let's bring in Walter Todd, Greenwood Capital Chief Investment Officer. He joins us now from Columbia, South Carolina. Walter, I have on my terminal here, energy stocks have not kept pace with the oil price. The blue line is WTI. The white line is energy stocks versus the S&P. That's a substantial gap. Does that close next year?
We think it could, and it's started to close here in the last couple of weeks, even as we've seen. I think energy stocks in general are incredibly underowned by investors right now because it has been the worst performing sector, or one of the worst performing sectors this year on a year-to-date basis. But I think as we move into 2018 and we see this reflation trade starting to take shape in the market, we think energy stocks are poised to do pretty well in the new year.
How would you be playing that?
Well, I think there's a variety of ways to look at it. You can look at certainly the exploration and production companies, both domestic and global. So you could look at a BP, for example, on the integrated oil side. You could look at a ConocoPhillips on the E&P side. But also the service names have really been hit extremely hard this year, and we think are due for a rebound as we move into 2018. So a Schlumberger, which is a global operator, would do very well in that environment.